Hey guys, what is going on? Welcome to the video. So in this video, I'm going to be going over how I stayed overall profitable in such a crazy red market. I'm also going to be going over what stocks I like the most on this huge market dip and my strategy moving forward in this market. So without further ado, let's go ahead and get into the video. So the stock market has taken quite the tumble in the past 2 weeks. We've seen some of these stocks go down over 50% from recent highs. All these stocks have been recently so hyped up, have been trading at such a high multiple, at such a high price. These stocks have now dropped down to more reasonable levels. We've seen the tech sector as well take a huge dip. And just overall, a lot of these stocks' fundamentals did not align with the overall stock price and the valuation of the company. So in the market, we're seeing a rebalancing of that, along with rising interest rates, and then also just all these new investors, new traders in the market. This is the first time they've seen so much red. There's a ton of panic selling going on, there's a ton of margin calls going on. So overall, this has just resulted in the recent 2 weeks that we've seen. Now, is the stock market going to keep on moving down moving forward, or what's going to happen? It's impossible to know what's going to happen moving forward in the stock market, whether we bounce and have a full reversal in the coming weeks, or whether we keep trending down for the next couple weeks. It could go either way. My personal thought is the stock market has aggressively sold off a lot of these overvalued plays. They've now gone to such reasonable levels. Even some of these have gone from way overvalued to way undervalued. And in my opinion, this has just happened so quickly that we're going to see a quick bounce. Kind of like we saw last March. Stuff happened so quickly, the most aggressive sell-off we've ever seen in the stock market. We had that V-shaped recovery because everything got priced in so quickly. In my opinion, this is just a short-term correction. We're seeing a rebalancing of value, and it's healthy for the stock market. And in my personal opinion, we see a bounce back pretty quickly. Now, I could very easily be wrong on that. We could see the stock market keep on going down for the next month or so. But in my opinion, there's no catalyst large enough to make the stock market go down for an extended time period. I think that this is going to be one of the biggest bull markets in history, and this is just a short-term blip on the radar before we continue the run up. That's my personal thought on that. So how have I stayed profitable in this market, and what have I been doing in the stock market? So first off, I've been very profitable trading off the day-to-day volatility, and I've seen some of the biggest opportunities day trading wise that I have in a long time. So taking a look at my short-term trading account gains, I've had very consistent gains. When I started actively trading in this account, starting the beginning of January and February were obviously very bullish months for the stock market overall, but I've had very consistent and even more aggressive growth in this account towards late February and early March because of this volatility and so much opportunity to trade off of. So when this trading account started in January, I started with $25,000 and I've now grown that to over $800,000 trading off volatility, trading off day-to-day opportunities. So much opportunity day-to-day in this market. We're seeing huge dips, huge recoveries almost by the day. So massive opportunities day trading wise. And for those interested, I've gotten a lot of requests about starting a course, and I actually just released the course. That link is the first link in the description. You can use the code MARCH to get $100 off. In that course, I teach everything from technical analysis to what I do to my personal strategies, and just every single one of the trading strategies that I use is in that course. So if you're interested, that link is down below. You can start your path to profitability in any market, whether it's green or red. There's always opportunities, and that's what I teach, along with all my trading strategies within that course. And don't worry, I'm not going to be one of those people who promote their course nonstop. I just keep it in the description, but just want to let you guys know that it is out if you're interested. Alright, so what I'm doing in more of my long-term accounts. So this week has been absolutely insane for this account. I've had days this past week where I've been down in this account over a yearly salary, over $40,000 some days. So it's been wild. Now what am I doing? I'm slowly averaging down in these positions that I'm confident in. I'm still staying pretty heavy cash, but I'm slowly buying, slowly averaging down in all these beaten down stocks that I'm most confident in, that I expect a big recovery. Now, last March, there's so many people who missed out on those opportunities, and while right now these are not the same opportunities we saw last March, but there are some massive opportunities in the market, and you'd be foolish not to take advantage. There are some valuations out there, in my opinion, that could very easily double or triple up within the next couple months, just from the price that they're trading at right now. If you go out, do your homework, do your research, buy great companies that you're confident in. A lot of these stocks are brutally beat down, and they will have a massive recovery very soon, in my opinion. And a lot of these valuations, we could see these double up or triple up in the next couple months, in my personal opinion. We are now seeing so many companies that their fundamental value is now below their overall valuation, along with the growth coupled with a great management team and just a company that you believe in. Start buying these companies slowly, averaging down. And for any long-term position you're confident in, this is the way to do it. Buy on dips like these, and I promise you, you will not regret it. There are some huge opportunities out there in SPACs as well. So these SPACs, the pre-merger SPACs that have not had their ticker change and merger yet, these SPACs, they have the floor value of $10. Now this is very important. Now a lot of these SPACs are now trading right at $10. So what does this mean? You essentially have zero downside buying these stocks near that $10 price. Worst case scenario, you get to that redemption date, you can redeem your shares for $10 per share and pretty much lose nothing. Best case scenario, and what I believe will happen with most of these, you're buying these SPACs near $10 that then go back to the previous valuation where they were at, 15, 16, 17. That's where a lot of these SPACs were sitting. They're now back at 10. I think we'd easily see a run back to that level, and that's 50, 60, 70% right there in itself, and you're essentially getting no risk with these plays. So SPAC stocks are some of the best opportunities in the entire stock market right now. Some great discounted SPACs that I personally like a lot. First, ACIC, this is the merger with Archer, is now sitting close to that $10 level, pretty much no downside at this price, and one of those companies with massive upside. One of my personal favorites, STIC, this is the merger with BarkBox, another one sitting right close to that $10 price. This is a stock that I personally see pretty easily going $20 plus by the end of this year. A couple more that I see great value in right now is those two Chamath SPACs, ticker symbol IPOF and IPOD. I do believe whenever they do announce the merger with these, we do see an initial pop. Of course, it does depend on what company. These do have the potential to be huge. Another one is Bridgetown, ticker symbol BTWN. This is the SPAC backed by Peter Thiel. It has some big rumors behind Tokopedia with this deal, which in my opinion, if it was Tokopedia, this would have a good chance of being an $18 to $20 plus SPAC. Of course, you guys know that I like Pershing Square, ticker symbol PSTH, a SPAC backed by Bill Ackman. And then another one that I like that is rumored to be targeting a crypto-based company. This is GSAH, backed by Goldman Sachs. They have so many connections, and right now, pretty much no risk sitting at that $10 level. So worst case scenario, we don't get a merger anytime soon, and it stays at this price, so you're pretty much taking no risk with this investment as well. So some other companies that I'm personally loving on this dip, and I've been averaging down pretty heavy in these, and I see a huge reversal very soon, and I think these valuations are an absolute steal for some of these companies. So some of these that I'm consistently buying include Nano-X Imaging, ticker symbol NNOX. I probably built this one out to be my biggest position recently. I personally think this will be a $100 stock when and if they do get that FDA approval, and we get a run up to that date. They recently did have earnings. They had a smaller than expected loss, which is big, and they are in talks with the FDA right now to start getting that FDA approval date and get this ready to be approved. And they're also on target to deploy 15,000 of those Nano-X imaging cameras by 2024. This company has fallen victim to the market crashing these growth stocks and these pre-revenue stocks. But like I've been saying, this is a stock that I believe is a $100 stock when they do get that FDA approval. So this is one that I've been averaging down very heavy in, and I've built this stock out to be my biggest position overall. Another one that I have been buying on this dip is Clover Health, ticker symbol CLOV. This one has been held down by so many panic sellers, a ton of stop losses being hit. This has just been a falling knife recently, going from a high of $16 and now sitting at $7 and was actually at $6 this past Friday. So this is another one of those big growth stocks. They recently had earnings which are very impressive. Total revenue 46% year over year, and also a 43% increase year over year in their customers. This is a technology-based healthcare company, and when this recent market correction does subside and everything starts bouncing back, I think Clover will be one of the biggest and one of the most aggressive bounce back candidates. So next up, Nano Dimension, ticker symbol NNDM. This is a stock that was pretty inflated by ARK buying super heavily, everybody following ARK to be buying this stock, but now this stock is beat down heavily. It was recently at a high of the mid-17s. This has now dropped over 50%, now sitting right at $7 per share. Now the thing with this one, this company has had so many offerings, and these offerings, a lot of these were priced over that $10 level with institutions buying at that price. So with institutions having the faith that they were getting a deal on those offerings, buying above current price, Nano Dimension has a very healthy balance sheet from all these offerings. And that's not even including the huge growth that this company is going to have with that growing 3D sector. So this is stock that will have a massive bounce back along with the others as well in my opinion, and I would not be surprised to see the stock back at all-time highs and way above that by the end of this year. Another one that I've been aggressively buying is Romeo Power, ticker symbol RMO. My cost average, I'm down pretty huge on this one since I started buying this stock right at $20. But I have been averaging down. My price average on this stock is right at about $14 now, and this is one that I see having a full recovery back at that $20 plus level by the end of this year. This is by far the best valuation in any of these EV battery plays in my opinion. Already has deals with contracts underway and will be a massive company in the future in my personal opinion. Next up, NEO. In my opinion, NEO is an absolute steal on this dip. So many people have been wanting to get into NEO. Now is your chance. This is a stock in my opinion that'll be up to $100 plus within the next couple of years. Massive growth behind it. And so many of these EV companies getting heavily beat down. These are when you need to start buying them. When fear is in the air, that's when you're buying these companies. Do not chase all the hype. Do not chase this stock when it's $60. Now you're getting that 50% off discount on a lot of these stocks. This is when you start heavily buying. Another one that I like a lot is Desktop Metal, ticker symbol DM. Down from its recent high of the mid-30s, down to over 50%. Now sitting right at $16 per share. This is one that's going to have massive growth in the future. It's in the growing 3D printing sector. And once again, this is another one that I would expect that is back at all-time highs by the end of this year. And one more, CRISPR Therapeutics, ticker symbol CRSP. If you're a believer in the genomic space and the gene editing space, you already know this is going to be a massive company. This is another one that's right 50% down from highs and a great discounted price to be buying right now. So those are just a couple that I'm buying very heavily right now. There's so many opportunities in this market. When the market bounces, the people who are slowly averaging down, slowly buying, they will be rewarded. In my opinion, this is an opportunity we should not be passing up to be buying these companies at these discounted prices. Once again, if you're interested in joining that course, finding out all my trading strategies, how I grew that account from $25,000 up to $800,000 plus, that link is the first link in the description. Use the code MARCH for $100 off the course, and that'll be available for the first week on that discounted price. Hope you guys are hanging in there during this crazy market, and best of luck to all of you. Let's get rich.